Are you looking to invest your hard-earned money but don't know where to start? Look no further than the advice of Wall Street Millionaires. Welcome to Financial Flipside. In this video, these titans of finance that have made their fortunes through savvy investments and strategic decisions will be sharing their wisdom with you. So sit back, grab some coffee, and get ready to learn from the best in the business. Number 1 advice: buy more stocks during the market crash. The thought of buying more stocks during a market crash can be terrifying for most people, but it's actually one of the best pieces of advice you can get from Wall Street millionaires. The reason behind this is simple. When the market crashes, stock prices decrease, which means stocks are on sale. By buying more stocks during a market downturn, you're essentially getting them at a discount, which will benefit you in the long run. But before investing your hard-earned money into any stock, it's important to do your research and make sure that you're investing in companies with strong fundamentals. It's also important to keep in mind that investing is a long-term game. So even though there may be short-term fluctuations, if you invest wisely and hold onto your investments for an extended period of time, chances are high that they'll appreciate over time. If history has taught us anything about stock markets and economic cycles, it's that things always recover eventually. So instead of panicking during a market crisis or trying to predict its movements, focus on staying calm and making smart investment decisions based on well-researched information. Number 2 advice: invest in ETF mutual funds. Investing in exchange-traded funds, or ETF mutual funds, is a wise decision for investors looking to diversify their portfolio. This type of investment allows an individual to own a portion of multiple stocks, bonds, or other assets through one fund. The diversity provided by ETFs helps reduce the risk of losses due to market fluctuations. ETFs are managed passively or actively, which means that some ETF managers track specific indices like the S&P 500, while others focus on investing in certain sectors, such as technology or energy. Investors can choose based on their risk tolerance and investment goals. One advantage of investing in ETF mutual funds is the low expense ratio compared with traditional mutual funds. Moreover, trading fees for buying and selling these funds are generally lower than those associated with buying individual stocks. Another benefit is flexibility. Investors can buy and sell shares throughout the day at current market prices, instead of waiting until after close of business hours like traditional mutual funds. It's important to note, however, that no investment comes without risks. While diversification reduces overall risk, there's still a chance that any given asset within an ETF could lose value. Therefore, it's always recommended to do your research before making any investment decisions. Number 3 advice: invest in different real estates. When it comes to investing in real estate, Wall Street millionaires recommend diversifying your portfolio. This means investing in different types of properties, such as residential apartments, commercial buildings, or vacation homes. One advantage of investing in different types of real estate is the opportunity for consistent income streams. Residential properties can generate rental income, while commercial spaces can attract long-term tenants and lease agreements. Vacation homes can also provide a lucrative source of passive income through short-term rentals. Another benefit is protection against market fluctuations. The real estate market is known for its volatility, but by owning a diverse range of properties, you have less exposure to risk. If one area experiences a downturn, other investments may still be able to perform well and balance out any losses. Investing in different types of real estate provides an opportunity for asset appreciation over time. As properties increase in value, so does your net worth. By having a diversified portfolio that includes various types of property investments, you increase your chances for financial success and stability. Taking the advice of Wall Street millionaires on diversification when it comes to real estate investment may help mitigate risks and maximize returns over time. Number 4 advice: invest in companies that will still be rocketing in the next 5 years. Investing in companies that are poised for growth is a smart strategy to build long-term wealth. But how do you identify those companies? Wall Street millionaires recommend looking for businesses with strong fundamentals, innovative products or services, and a competitive edge in their industry. One way to find these types of companies is by conducting research on emerging industries and trends. For example, the rise of renewable energy and electric vehicles presents opportunities for investment in related fields like battery technology or sustainable infrastructure. Another approach is to analyze a company's financials, including revenue growth, profit margins, and debt levels. Look for businesses with consistent earnings growth over time and manageable levels of debt. It's also important to consider a company's management team and their track record of success. Strong leadership can drive innovation and make strategic decisions that lead to sustained profitability. Ultimately, investing in high-growth companies requires patience and a long-term perspective. It may take several years before the stock price fully reflects the company's potential value. However, if you're willing to wait it out, investing in these types of companies can result in significant returns over time. The investing advice from Wall Street millionaires can be summed up in one word: diversify. Instead of relying on a single investment strategy or asset class, it's important to spread your investments across various options, including stocks, ETF mutual funds, real estate, and companies with high growth potential. While there is no guarantee that these tips will make you a millionaire overnight, they are tried and tested strategies that have helped many investors achieve long-term financial success. By staying disciplined and patient while investing for the future, you too can build significant wealth over time. Remember to always do your research before making any investment decisions and consult with a financial advisor if necessary. With dedication and persistence, anyone can become a successful investor like those on Wall Street. Thank you for taking the time to watch. Show your support by liking and sharing this video. To stay informed on key financial topics, subscribe to Financial Flipside and switch on notifications so you'll know when new videos go up.